Hey, thank you, Rina. So good afternoon to ARTHALAND, your investors. Um, Again, this is part of ARTHALAND series on how we can reach out to their investors. So this is practically a discussion of how the COVID-19 health scare has been impacting the Philippine property sector. But before I present our property slides, let me just first give you an overview of what we have been seeing right now. Of course, the World Health Organization has stated that the crisis has peaked in China. In fact, some of our colleagues, Colliers in China offices are now back to their offices. And however, while that is the case in China, it's not the case in other parts of the world. So you have United States, Italy, UK, still trying to contain this virus. Now, there are some comparisons between the SARS virus in 2003 versus the COVID-19 now. And of course, those comparisons are expected and are natural. However, we have to note that China right now is a much bigger economy. Compared to 2003, China's economy has grown by about 700%. And China is now more interconnected with other economies in the world. So we believe that the impact will probably much bigger compared to what we experienced during the SARS crisis of 2003. Again, before we go to the office and residential slides, let me just first give you an overview of what we see in the market. The GDP growth forecast for the Philippines has been lowered, of course, if you're monitoring the news. It is now down to about 3 to 5%. This is the expectation of a lot of credit rating firms, multinational banks, and this is lower than the 5.5 to 6.5% that the government initially projected. But what's good we see right now in the market is that there's some analysts that are projecting a greater pace of economic growth in 2021. In fact, they're expecting 7%, 7.3%, because they're expecting a much stronger rebound by 2021, especially if market sentiment improves and if this virus is contained by the second half of 2020. So just to show you how the Philippine economy performed over the past few years. So, of course, during the late 90s, that was during the Asian financial crisis, there was some impact on the economy during the global financial crisis of 2008, 2009. But as we can see here, after the H1N1 outbreak and the global financial crisis in 2009, starting 2010, the Philippine economy has somehow been growing by about 6 to 6.5%. So the Philippines, of course, is one of the fastest growing economies in the Asian region. So while there might be some slowdown this year, we expect a stronger economic growth by 2021. So just a few items here. So how will the virus affect uh, the other economic segments here? But prior to the COVID-19, we were expecting a very good rebound for the economic growth of the Philippines because the national budget was enacted on time. And then the government spending, while we might see slower growth for 2019 and for 2020, we might see a stronger pickup by 2021. Same with household consumption. Uh, these are the inflation and the mortgage rates that we have been seeing in the market since 2001. Of course, inflation remains low, and the central bank has been cutting interest rates and then has been, injecting more liquidity in the market because they want to lend to more companies, more SMEs. So that should somehow help these companies be insulated from the impact of a slower economic growth for 2020. Of course, what has been keeping the Philippine economy afloat is the remittances. So this represents the money sent in by OFWs since 2000, for 2020. In fact, for January 2020, the remittances grew by 6.6%. So that's a pretty strong growth considering the high base in January of 2019. But let's see, for 2020, we might see some slowdown. Some of the Ws are, of course, losing their jobs because of slower economic growth in other parts of the world. So let's see if we'll still be able to hold on to that $30 billion remittance level for 2020. But of course, remittances are a major driver of the economic growth, and this spills over to property. As you know, this is part of the spending of Filipino households here, the money that they pay to pay their monthly amortization or buy condominium units. So it will really be a positive for the property sector if the remittances are sustained for 2020. So again, I want to discuss the impact of the COVID-19 in office and residential segments, because these are two residential or property sectors that are somehow affected by the COVID-19. But let's not just dwell on the COVID-19's impact on this sector, especially on the negative side. Let's also look at the positives and how should property developers like ARTHALAND and investors, buyers of office space or residential units, how should you reposition or realign your strategies given the COVID-19 impact in the market? So this just shows you the profile of office space occupants in Metro Manila. So as you can see here, it's equally split among three segments. So you have the red shade here represents the POGOs, the offshore gaming companies. The blue shade represents your traditional companies. So these are non-outsourcing, non-POGO companies. So these are multinational corporations, flexible workspace operators, banks, even government agencies. And then the remaining 29% is equally split between the outsourcing companies. So these are the call centers, the likes of PayPal, Google, which are providing higher value outsourcing companies, Anthem, which is into medical coding. So as you can see, there's really not one segment that is driving the office demand in Metro Manila. So that is good for the sustainability of the office market in Metro Manila in general, because if there is a slowdown for one segment, for instance, for POGO, for instance, you have other segments such as outsourcing, the traditional companies that will probably still stoke the Philippine office market. And especially once the COVID-19 global health scares contained by the second half of 2020, we will definitely see a stronger rebound for 2021. So we will see stronger pickup for outsourcing companies, for instance, for BPOs. While we admit that there's some companies that are holding off their plans in terms of expansion, this will probably only be for about a quarter, for about 3 months. But once the market sentiment improves, we definitely see these companies occupying more space in Metro Manila. So this is just our slide on the POGOs. Now, why POGOs? Because for the past 3 years, the POGO sector, the offshore gaming sector, has been a major driver of office demand here in Metro Manila. So if you take out the demand from POGOs for 2020, we might see vacancy increasing. But again, similar to what I mentioned earlier, you have other segments that will probably continue driving office space demand across Metro Manila. You have the BPO companies as well as traditional companies, the government agencies that will probably fill the space left by the POGOs. I think what I should highlight also is the fact that if POGOs leave some of the office buildings right now, you have other companies that are willing to take up the space that they vacated. So that should be a positive for the market in general. So this is shows you the pre-leasing. So some companies, BPOs, have been pre-leasing office space. So these are office buildings that will be completed for 2020. But as you can see, that's a strong pre-leasing, 60%, meaning if we're expecting 1 million square meters of office space that will be completed in Metro Manila for 2020, 60% of that, or 600,000 square meters, has been pre-leased. So you have occupants willing or waiting for these office space to be completed because they will take up office space in these buildings once they are completed. So what do we see in the office segment overall for 2020? Um, there might be a higher vacancy, definitely, because of some uncertainty in the market, especially if this coronavirus threat persists. But again, you have the traditional companies, the government agencies, banks, financial institutions, insurance companies that might still continue occupying space, especially once the crisis is contained in the first half of 2020. So they will probably still drive the office demand here in Metro Manila. So once these companies continue occupying more space, definitely the vacancy forecast will be at the lower end of our forecasted range, which is about 5 to 7%. So they're probably over between the 5 to 6% vacancy, which is not bad at all because we saw higher vacancies before, especially during the global financial crisis. So as you can see here, the left side, the office sector, so these are mainly our key points that I discussed earlier. But I think what's also important to note here is some occupants might now be able to, conclude more attractive deals with the developers, and if they are planning to firm up long-term leasing deals with developers, perhaps now is the opportunity to do that. For some occupiers, of course, we also encourage them to look at other areas, fringe locations, so outside of the business districts, but where you still see some quality office space so that they can lease out. So they should look for those buildings which are at a discount compared to business or buildings that are in major business districts such as Makati or Tika Center, for instance. So look at other locations aside from those major business districts and adopt new technology. For a BPO company, you now have more work from home arrangements. So perhaps now is an opportunity to build your own data center, apply a flex and core. So a part of your staff is working in a traditional office space, half of it is working from home. So you should consider adopting that, and then revisit density ratio. So especially now that we're seeing all these wellness features of buildings, this would probably contribute to companies hiring better high quality talent and retaining that talent. So occupants should consider the wellness of their employees and of course the features of the buildings of the office space that they occupy. For landlords, for developers, of course, look for traditional and outsourcing occupants, especially for the office space that will be vacated by POGOs, and target epidemic resistant businesses. So you have the likes of pharmaceuticals and the biotechnology. Maximize the wellness features of your buildings, which I mentioned earlier. So if you are a well certified building, highlight it. If you are a LEED certified building, highlight it. If you're awaiting a LEED certification, you should also maximize that in your marketing efforts. And also for developers to consider um, in terms of air conditioning as well as the sanitation of buildings, highlight property management because this is essential for the health and quality of your building as well as the health of your employees. I also have a few slides on the residential sector, but generally what we have for the residential sector is there's just a significant number of condo units that we see being completed for 2020. So that's a lot, 14,000, and almost 80% are in the Bay Area. The problem with that is the Bay Area, of course, has for the past 3 years, much of the residential demand has really been concentrated on POGOs. So they have been dependent on the POGO demand. But now that you have travel ban, you have enhanced community quarantine, demand in that area might slow down for 2020. So there's this potential for developers of condo units, other locations in Metro Manila, and they should seize that opportunity. Again, if we see less Chinese buyers, especially in the Bay Area, we will see a higher vacancy for the secondary residential market for Metro Manila in 2020. So again, it depends on the duration of this Luzon quarantine. If the virus peaks during the first half of 2020 and things normalize by the second half of 2020, then we will definitely see a rebound in terms of residential demand. Again, in terms of decline in prices of condos and demand, we might see a stronger decline in the Bay Area because that has been dependent on offshore gaming sector over the past 3 years. Um, so this is our summary for the residential sector. If we will see a slower increase in prices, some developers will probably uh, pause or hold their new launches and then launch new projects once the market condition, once the market sentiment improves. So that will probably be early 2021. And then for what are our recommendations for developers? Of course, develop more flexible, attractive terms to attract more buyers. Highlight property management because if you're a developer and you're able to provide adequate property management services, then you'll be able to attract more buyers, more interest from institutional investors as well. And note that developers that will be able to stand out and respond well to this COVID-19 crisis will definitely be remembered once the virus is contained and market conditions improve. So we saw this previously during the Asian financial crisis and global financial crisis, wherein the developers were able to serve the demands of their clients as well as those that were able to respond during the crisis really stood out and have been doing well up to now. Of course, for buyers, look at attractive packages available in the market. Mortgage rates are again low. Interest rates will probably be sink further because of the central bank cutting interest rates. So that should be an attractive option for residential buyers. Prices in the secondary market, the completed condo units might soften. So investors should be on the lookout for prices or for available condo units in the market and look for available and attractive pricing options.